Hi, everyone. Thank you so much for joining us today. Before we kick this off, I do want to point out to the audience that we welcome questions. So during today's presentation, if you have a question, please post it in the Q&A section at the bottom of your screen, and we will address those questions after the presentation. So I'd now like to turn this over to Stephen Saltstein, Force Family Office's CEO.
Thank you, Callie. And thank you, everyone, for joining us today. We really appreciate you taking time out of your day to be with us. We have a super interesting webinar for you featuring iQSTEL. These gentlemen, this management team, they are self-made. They had the idea that the largest carriers in the world, be it Verizon or Deutsche Telecom or AT&T, needed help with routing international traffic. They basically, started this business from nothing and have built it. They're over a $400 million run rate, and their goal is to get to $1 billion. And just to give you a sense, like they were begged by the NASDAQ to uplist from the OTC. It wasn't like they approached the OTC. The NASDAQ approached them and said, please, we want you to come list. And they did it by themselves. So it's such a fantastic story. There is so much promise here. It is my great pleasure to welcome Leandro Iglesias and Alvaro Quintana, management team of iQSTEL. Gentlemen, the floor is yours.
Thank you, Steve.
Thank you very much, Stephen. Thank you very much for the opportunity. Welcome, and thank you for attending to this presentation. The way that we present our company is like a global connectivity, AI, and digital corporation. And our vision always has been to be global. So we founded this corporation in order to offer to the large telecommunications company the solution to grow and expand their coverage, international reach in the more cost-efficient way. So we have been building this connectivity in a global reach. And after that, right now, we are start offering and delivering high-tech, high-value services like telecommunication, fintech, AI, and cybersecurity. And, I think that it's important that for 10 years, we operate this corporation as a private held company. So this has been, we start this from scratch, from zero revenue. And we, over that period that we were a private health company, we developed our strengths and our process and our knowledge of the market and prepare us to the process that started in 2018 when iQSTEL born as in the OTC market. Alvaro, please.
Yes, as Leandro was mentioning, we founded the company in 2008, and we can divide the history of iQSTEL in two parts. The first part is from 2008 to 2018, the first 10 years of operation when we were a private company where Leandro and I were the main shareholders. And we took the company from 0 to $13 million in revenue and 150 active interconnections with the major carrier companies around the world. In 2018, we decided to test the open markets, and we did a reverse merge with an OTC Pink company. In 3 years, from 2018 to 2021, we got our securities designated as to be traded in the OTCQX market. And in that time, we were approached, as Stephen was telling you, we were approached by NASDAQ. They contacted us directly and offered us all their support to uplist the company to NASDAQ. So since September 2001, we were working together with a NASDAQ analyst preparing the company to be uplisted to NASDAQ, and we finally did it last month of May, and we did it by a direct listing, no banking, no any banks supporting us on that process. We did a direct listing into NASDAQ. And I could say that the other part of our history is from 2018 to the present time, the last 7 years, where we has been being traded in the public market, and we in that time we completed 12 ventures and acquisitions, adding fintech, cybersecurity, and proprietary AI services. We extended our telecommunications portfolio. We, from 150 active interconnections, we are currently running more than 600 active interconnections, and our revenue went from $13 million in 2008 to more than $340 million this year. All the companies that we have acquired has been carefully selected to ensure that we enrich our product and services, that we extend our global coverage, and that we strengthen our customers' relationships.
Very well. Thank you, Alvaro. We are a global trust corporation. We combine a unique mix of telecommunication services, fintech services, our proprietary AI services, and cybersecurity. We have 6 offices around the world. We have more than 100 employees. We cover 17 time zones. Just to giving you an idea of our global operations, as Alvaro commented, we have like 600 network interconnections around the world. We're offering international voice services, SMS services, and connectivity services. To put an idea, we're covering right now 4 continents, more than 20 countries, and we manage more than 5 billion minutes per year and more than 20 billion of SMS per year. I love this slide because this slide gives us, like a very simple, what is our power? Our power is over all those years, we have built a very robust business platform with over 600 of the largest telecom operators around the world that allow us to sell high-tech and high-margin products. What is our reach? We can reach around 2.7 billion users through our customers. What is the value of our company? The business platform that we have built is very difficult to replicate. We have been invested 17 years building this, and we already complete the hardest part, that is getting into the customer, approved by the vendor, connect with the network interconnection. For any company, just doing this is a journey that takes years, and we are proud to say that we are already there. And what is our vision? With this business platform, with this strong business platform, is to become this company in a $1 billion revenue by 2027. Of course, in this process, we are going to discuss how can we achieve our sustainable profitability and innovate high technical solutions. This is a slide, I will talk a little bit about this. This is just a slide about our largest telecom customers. That are the companies that they trust in us, and we are doing millions of dollars in business per year with them. Let's review some names. Verizon. T-Systems, this is a subsidiary of Deutsche Telekom. T-Mobile, Vodafone, Orange, Digicel, Tigo, China Mobile, Telefonica España, Telecom Italy, Cable and Wireless, Korea Telecom, Tur Telecom, Omantel, PCC Global, Intel, it's MTN, Belgacom, it's amazing companies that is, as I say, we have been building this for 17 years, And this is a real asset because we are doing business with them. They trust in us. And this is what we are taking advantage for offering them more than telecom services as fintech services, AI services, and we are starting to offering them cybersecurity services too. What is our value proposition? Our value proposition is to becoming in one-stop shopping that offering all these telecommunication, fintech, AI services, and cybersecurity. This is really unique. When you analyze in some companies around us, this value proposition is unique. So we have divided the company like in three business divisions. The first one is the telecom division that is representing nowadays. We offering here voice and SMS and VIDs, eSIM roaming services and international fiber optic. We around the 80% of our revenues here. The fintech services, when we have offering a MasterCard debit card, international top-up, gift cards, and the AI and digital services when we are offering AI services and cybersecurity. Álvaro, talk a little bit about
yes.
this
We
growth.
have already mentioned some of these figures. This is how our revenue has been increasing year after year through organic growth as well as through the acquisition that we have done during the last 7 years. So in 2018, we were at $13.8 million revenue, and our revenue run rate as today is more than $400 million. 80% of that revenue is coming from telecom services and 20% is coming from fintech services.
I think something important to remark here, Alvaro, that we were talking with Steve just before I start this presentation. Just for example, of course, we have been acquiring some companies, but for us, it's very important the organic growth. For instance, last year in 2024, almost the third part of our revenue was organically. So that's really important. So we have created a unique mix of acquisition and accelerate the organic growth with those acquisitions, adding program services, adding commercial reach, and adding footprint and business relations, of course. This is a graph that represents our story about all the acquisition that we started. We started in 2018 with Etelix, that was the company that we founded in 2008, and how over the years we have been acquiring companies and in this process. This is sometimes when we has given this presentation asking me about the explanation for each subsidiary. I will explain very simple, but every single subsidiary that we acquire, for instance, iQSTEL giving us the global services, Switzerland giving us the European market, SmartBit is specialized in Latin America, Whistle in the United States. So every single company that we have been acquired has been adding services, having the knowledge of a specific market and the business relations in some cases.
Where we stand. These figures are based on our last Q file for the 9 months ended September 30. So our revenue in the third quarter this year was $102 million, which represents a growth of 42% comparing quarter over quarter. Our accumulated revenue for the 9 months of the first 9 months of this year is $232 million, which represents a growth of 26% comparing the same period of year 2024 versus 2025. The adjusted EBITDA, combining the telecom business and the fintech business, is $683,000 in the third quarter. Our revenue run rate is as I mentioned before, is about $400 million a year. The adjusted EBITDA run rate is $2.7 million. We have assets a little bit above $40 million, which represent $12.23 per share, per issue share. Our net shareholders' equity is about $17 million, which is equivalent to $4.66 per share. With outstanding shares as of September 30, a little bit over below 4 million shares, issue shares. And we are in track to achieve our full year revenue forecasted that is $340 million for this year. Very important things to remark is that we have no dilutive debt, we have no convertible notes in the company, and we have no warrants outstanding. I think that's very unique in a company like us.
Thank you, Alvaro. Where we go? Well, we plan go from $2.7 million EBITDA to $15 million adjusted EBITDA in 2026. So we are planning to go from $400 million to $1 billion run rate in 2027. For this, we are planning to complete 2 acquisitions. For us, one of them is to increase our presence in Africa, and this acquisition is going to add like 8 countries of presence in Africa, and of course positive EBITDA, and a really important revenue stream. And also we are pursuing another company in digital services. In both cases, we already have a non-binding MOU signed, and we are in the final negotiation to move into a binding MOUs and complete the acquisitions. So our market cap is less than 20 million nowadays. And when you analyze some companies that are in our arena are trading something between 10 and 20x EBITDA. So we believe that in the process that we start to showing how our EBITDA is going to increase, we are going to start close this gap between some companies, the valuation that our company has, and some companies that are in our arena have. And if I can say a simple sentence where we are, I love this sentence. We are transitioning from a phase of heavy investment to a phase of accelerating profit. So we have been gaining critical mass in this process. We already, our business model is proven. We are with EBITDA, positive EBITDA. So right now we are every single revenue that we put on our company, goes bottom line to increasing the EBITDA. So we're in this process to accelerate the EBITDA of the company, thanks because our business is really scalable. Why we are different? We built this company from scratch, and we have 17 years of a success story. Every single year, we met all our forecasts, all our projections. Something very unique here is that Alvaro and I, we control the company through preferred shares. We got listed in NASDAQ by ourselves, by direct listing. As Alvaro commented, our first contact was NASDAQ sent us an email in September 2021. And from that point, we start to, by ourselves, we haven't used an investment bank. We have been in this process, meeting all the requirements. We do all of our SEC filings by our own. We never file late an SEC filing in more than 7 years. We have prepared successful qualification of registration, 2 regates, and 3 S1s. And we believe that we have a very unique mix between the global reach that we have, the explosive growth that we have, high tech solution, and AI. And we only have 4 million outstanding shares.
Yes, we would like to mention that Litchfield Hills Research performed a full due diligence in our company a couple of months ago. They visited our offices, talking with several of our executives, watching our business platform, talking with our network operation center. They also contacted some of our customers, and they came out with a report uh, that suggests a strong buy signal, and it is $18 per share as a target price for our company. We can share with you the report if you are interested in getting more details on that.
Thank you. Well, finally, we have been partnered for 17 years. This is our baby. This is our project. We have high and goals to becoming this company in $1 billion company. We have been self-made in this process, and if you need further questions or anything, this is our contact information. We love to talk about our company, our project, our vision for this. Thank you very much. We are open to answer any question that you may have.
Great. Thank you so much. And you can stop sharing your screen and we will go into the Q&A. So how much of your recent revenue growth is recurring or contract-based versus transactional? And what visibility do you have for sustaining growth over the next 12 to 24 months?
Yeah, sure. Our revenue is not recurring and contract based. Of course, we have contracts that like 80% of our agreements are based on like we name like a business agreements for over 3 months or 6 months. So, around 80% of our revenue is really stable, but every single renewal for this agreement, we are increasing the amount of money that we are doing for those agreements. And for us, being a NASDAQ company has been a very good, stamp for our company, and our customers are using this like, we have all the information is public. They believe in us. They see like our financial, all the reporting that we have a ethic code and all the corporate governance. So basically, even though we don't have recurring business, around 80% of our business are based on a quarterly and half year contract.
Well, but I would like to add something regarding that. When Leandro mentioned that we review the contracts every quarter or every 6 months, is basically we review the volumes and the capacity that we are allocating to each contract. Because our contract are long-term contract, and the particularly business relationship in this business is that there are a lot of technical resources and network elements involved in each interconnection. So once you sign an interconnection agreement, it's very hard that you disregard that agreement in a short period of time. So that's why every company that we have signed an agreement with during the last 17 years stay with us. We have been doing business with them for all these years. Of course, we have new customers, but most of them, for example, the 150 customers that we have during the first 10 years continue being our customers as of today.
Well,
Thank you.
Yeah.
No, please go ahead.
No. Yeah. In fact, it's so difficult to get a new customer that this is the reason why we have been acquiring companies, because we don't want to wait 10 years, 5 years to getting into a new customer or a new market. So this is the reason why of our strategy to acquire companies. So once you are in, you have to think like a such a big companies open their network to exchange services with them. Once you are in, they start and keeping doing business for you for years. If of course you deliver the quality and the services and building the business relation with them.
And can you talk a little bit more about your strategy when you with an acquisition
Yeah, sure
and
thing.
in the process? Yeah.
Sure thing. As I say, this process is so unique that we have with the connections that we decide when we start in the OTC market 7 years ago, we started a process for acquiring companies that giving us, you know, the business relations, the know-how of the business, and the connections with the customers and everything. Let me give you an example. This is for one side. We acquire companies that gave us the European knowledge of the connectivity services. So we acquire a company there that is based in Suiza, and we have a telecom license in Suiza. The name of the company is Swisslink. But we acquire a company in the States in the same way, because the United States has unique in the knowledge of the customers and services and the know-how of the business. And we acquire a company there, Whistle. But we acquire another company that is iQSTEL that has the know-how for the Middle East. They have a really strong presence in companies like Etisalat and Middle East. So this is the reason why of the acquisition. But at the same time, we are expanding our coverage, expanding our services, expanding our know-how and our technologies. But at the same time, has been really important to us that they match with our vision and with our corporate values. Very important. I think some Alvaro, you love to talk about this, the corporate values of the company and everything.
Yes. So every time that we acquire a company, we carefully select the company, how that company is not only how they are going to add value to our re add revenues, or we are getting more customer and more global coverage, is how they are going to strengthen our balance sheet. For example, during for those acquisitions, we have issued new equity. We have put in place two regates, three S1s, and of course that means that you issue new shares. But at the same time, we have been increasing the net shareholders' equity through the acquisitions, because we are adding to our group of companies more assets, licenses, and things that are creating value to our companies. So basically, we have if we compare the shareholders' net equity per share that we had in 2008 and the net shareholder equity per share that we have today, after issuing equity, after uh, doing all these registrations, the value is higher today than compared to 2008. So we have been adding value to our customers in that process, even though of course, we have been issuing new equity in that process.
Thank you. Looking out at your potential portfolio in 2 years, what will be your highest margin products? And looking at your gross margin now, it's very thin. How do you see those increasing?
Well, listen, is the telecommunication services are based on thin margin. That's the truth. So we need to increase the volume, And the good part is that our company is very scalable. But at the same time, we already are in doing business with our customers. They trust in us, and we are planning to start selling them different services. This is why we define our company like a digital corporation, because we're starting service offering them cybersecurity, and we are start offering them AI proprietary services that we have very connected with telecommunication, of course, but this is where we are planning to, increase the margin per dollar sale. So that's the strategy. Of course, we need to combine the increase of the quantity of and the volume of the services in the tiny margin that is telecommunication, but over that, selling more services with high tech, high margin. That's the secret sauce that we have for that.
Then what part of the world do you have the most traffic in? So which are your biggest markets?
I can say Latin America and Europe, but we have a strong presence in Middle East. By sure, Latin America, Middle East, and Europe.
Thank you. And when do you expect the entire company, not just certain subsidies, to become consistently profitable?
All of our subsidiaries are profitable. In this process, we are, the PUBCO, we have been using the PUBCO for raising funds to acquire companies. We have been to paying interest for that and everything. But if you take a picture, very simple, the EBITDA of our operating organization is around 2.7 million in run rate, and our PUBCO expenses is around $1.5 million. So structurally, we are profitable, but we are heading to increase our EBITDA to 15 million next year. This is the journey that we are working right now. I don't know, Alvaro, if you want to add something there.
Mm, no, not really. So I think we have, looking to add value every time that we acquire a company, and we have been focused on that, basically keeping our shareholders in mind in all this process. So that's
Good. Just for giving a big picture. Once we are in 2027 around $1 billion revenue, we are going to be in several in 8 digits EBITDA, tens of millions of dollars EBITDA for 2027. So we are in that point. We are starting to becoming a more profitability every single quarter, and we are accelerating this process.
And can you walk us through your capital needs as you scale towards that goal of $1 billion in revenue?
well, all our subsidiaries are has all their working capital covered. They produce enough revenue and enough profits for them to grow by themselves. Um, but we have, but for the acquisitions, of course, we need to look at financing, extra financing. We have done that through public offerings, Reg A's and S1s, as I mentioned before. And eventually for the next acquisition, we are going to follow more or less the same formula. We are not affecting our operating subsidiaries with that process because they can stand by themselves. As you can see in all our filings and financial statements, they are net positive net profit, all the subsidiaries. So we have been once we complete our plan is that once we complete these acquisitions that we are now working on, we are going to do that transition that Leandro was mentioning during the presentation, from an extensive investing process to a stable, profitable company. That's basically what we had in mind. So our process is going to be more or less the same this coming year that it has been during the last 7 years. But we believe that with these two acquisitions, we are going to have all the pieces that we were looking for in place. And from that point on, our revenue is going to explode, and our profitability is going to be finally be reached in consolidated figures.
Great. Thank you very much.
Sorry, I think it's something important to add. Being in NASDAQ giving us a competitive advantage in the negotiation process about the payment terms, to be honest. In the two companies that we already have, the MOUs, non-binding signing, that's something we agree. The payment terms are based to pay for that companies over the next 3 years. And in some cases, they are willing to accept a position in preferred shares in our company. So being said that for us, the picture has been completely different since we were in OTC markets and being an asset company, because nowadays even the potential target acquisition, they believe in us, they believe in our plan, they see that they can grow in a very large company and be part of a success story of company. And they love, the plan, the vision, what we are becoming. We are in that process to becoming in a huge powerhouse of connectivity and digital services, and they love the story, and they are willing to accept payment terms over the next 3 years in both cases. So being said that, even though we are going to invest in those acquisitions, we are not putting too much pressure in one go for those acquisitions. And we strongly believe that in the process that we are keep increasing our EBITDA month by month, quarter after quarter, the sooner or later the market is going to perceive the new valuation, and we are going to be in a better position to raising funds for our plan.
Great. Thank you. And thank you everyone for the questions. Before we close out, I just want to point out to the audience, if you have additional questions or want to be introduced to the team here, please reach out to me. Everyone has my email address. In turn, they will be reaching out to you. Will have all of your information as well. But I do want to turn it back over to you, Leandro and Alvaro, for any final words to our audience before we close out.
Well, we expect that you can see the value of this venture and the vision that we have been trying to share with you during this presentation. And we are a company that is in the process of growing, and we are still building this enterprise. But we can say that we have been done that very successfully. We have been reaching all our forecasts, all our revenue goals, all our we have increased our enterprise value, and we really care about our customers and our shareholders, and we always do the best to create value for all the parties that are involved in our organization.
Listen, for me, it's talking about our project, our company, our partnership for 70 years. Is I'm in Latin America. I have passion for this project, and this passion, we are focused on this, and 100%. This is only our only project that we are running for over the last 17 years, and we have been meeting and surpassing every goal that we have had over the last 17 years. So this passion, this dedication is the way that you can trust to work with us. And this is a very unique company because we are in the point that we are in the turning point, and we are ready to explode and becoming a company for $1 billion. If you analyze our company, no debt, no outstanding debt, anything, where no convertible debt, no warrants. You can see how undervalued we are. And this is a unique opportunity to join with us. We have been building something unique, and it's a fantastic time to enter in our company and everything. So thank you very much for giving us the opportunity to talk about our company. I love to clarify any further questions that you may have. And thank you.
Thank you very much. And thank you to the audience for attending today. And I hope everyone has a great day.